Hello, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top market events that are currently moving various assets. We'll be looking at the economic calendar, try to understand what are the key events, and also we'll be doing some technical analysis to try and understand the current market patterns on the charts. And once we cover that, hopefully everyone will trade from an informed perspective. So as usual, this session does not constitute investment advice. It's not a recommendation to trade. So always do your own research, do your own due diligence, and practice proper risk management. So with that, let's get things started. So from the economic calendar, we have quite a number of things happening. But most importantly, what we are basically seeing is the core producer price index, as well as the producer price index being the major things happening in the currency markets today, especially at 4:30 p.m. So if I filter my calendar to include all events, then you'll notice that we don't have much of major market movers. So early this morning, we had data coming in from Japan, where the current account improved to 3.03 trillion yen. This is up from 2.41 in the previous reading, and of course, better than the expected 2.59. So bank lending also in Japan increased to 3.1% as expected, and this is a uptick from the previous reading of 3.0%, which was revised downwards to 2.9%. So also, we had the M2 money supply in China year over year, which came in at 7.3% as expected, up from the previous reading of 7.1%. So new loans were up 990 billion yen. Yen. This is in China, up from the previous reading of 580 billion, and of course better than the expected 890 billion. So clearly, we are seeing good data coming from Japan and China, indicating an increase in business as well as in application for new loans, as well as the money supply. And this is a good sign that China is basically injecting more money into the system in order to support its economy. And we can already see this having a positive impact on Chinese equities. So French government budget balance had an increased deficit to 172.5 billion euros. This is up from a further previous deficit of 157.4 billion euros. So going ahead for the rest of the day, of course, you have a speech by MPC member Breeden. We'll be looking at Italian industrial production data month over month, NFIB small business index for the US at 2 p.m. Then the main event for the day will be the producer price index, which is expected to have increased by 0.4% in December, up in a similar amount as November, where we saw 0.4%. So core producer price index is also expected to increase at the same amount as the prior month at 0.2%. So for those who are new to fundamental analysis, I would suggest that you take advantage and use ChatGPT for your research, especially in your trading. And I'll be showing you a brief highlight so that some of these economic terms don't become difficult, especially when you are doing your research and analysis. So a very simple query on ChatGPT can give you some much needed information. For instance, questions such as what is PPI and how does it affect the USD will get you a pretty comprehensive answer. So let's see what we have here. So PPI, which basically stands for Producer Price Index, is an economic indicator that measures the average change over time in the selling prices received by domestic producers for their output. It reflects inflation at the wholesale level before it reaches consumers and is considered a leading indicator of price changes in the economy. So some of the key features of producer price index include measurement of wholesale prices. So PPI tracks price changes in various industries such as manufacturing, agriculture, and energy. So It excludes consumer prices. So unlike the consumer price index, which we use to measure inflation, PPI does not account for the prices of goods and services purchased by consumers. So it's an indicator of inflationary trends. So whenever you see a rising PPI, it indicates higher production costs, which may later be passed on to consumers, leading to increased inflation. So the impact of PPI on the USD, the PPI can influence the value of the US dollar through its relationship with inflation and interest rates. And here is how. Whenever you see higher producer prices, it signals inflationary pressures. If the PPI rises significantly, it suggests that producers are already experiencing higher costs, which they may pass on to consumers. So this can lead to higher consumer inflation, promoting the Federal Reserve to consider raising interest rates to control inflation. So the impact of on interest rates. Higher interest rates tend to strengthen the US dollar as they attract foreign investors seeking higher returns on dollar-denominated assets. So in terms of market perception, a higher than expected producer price index can lead to speculation about tighter monetary policy, boosting the dollar. Conversely, a lower producer price index might signal subdued inflation, leading to expectations of looser monetary policy and potentially weakening the US dollar. So, sectoral insights. PPI data provides insights into specific sectors of the economy, which can influence investor sentiment and currency markets. For instance, significant price increases in energy or commodities might have a ripple effect on the broader economy. So, in summary, PPI is an important gauge of inflation at the producer level. Its readings can influence market expectations about inflation, interest rates, and overall economic health, thereby impacting the strength or weakness of the US dollar. So as you can see, as much as you look at the economic calendar in trying to understand some of the data, if you don't understand what a particular data item means, then ChatGPT can be a pretty helpful tool. And I'm not recommending just ChatGPT. You can feel free to use other large language models, and hopefully you get to improve on your research and analysis for various economic measures. So just checking on the comment section here. Good morning, Paul. Good morning, Robert. All Sports TV, Jason, Wangari Patrick, Smith, Ken Moneki. Morning, everyone. I can see Ronald Hillary, O'Neill Jack, doing this from South Africa. Interesting. Cherry Genius, thank you. So welcome, guys. Welcome, everyone. Remember, if you have any questions related to the presentation, feel free to raise those questions in the comment section, and I'll be addressing those questions as we approach the end of the session. So now that we have seen what the producer price index means, if you go back to the economic calendar and you check the data point again, sometimes you might want to click here on the graph side, and then you look at the previous data and the trends that you may have experienced over time. So apologies, this is taking some time to load. Okay. So as you can see, when the US was having literally very high inflation, especially in the period around 2021 to 2022, the producer price index per month were coming in at a very high rate of about 1.2%, the highest being about 1.4%. So these numbers basically showed that the oncoming inflation or the oncoming CPI would continue rising. So later on, as the Fed became very aggressive with rate hikes, we started seeing producer prices dropping. So there are numerous occasions where there was 0.5% drops. However, in the latest couple of months, all we have seen is producer prices increasing rapidly. So I would say from July last year, we started seeing producer prices being on the positive, and they have remained on the increase side for the better part of that period. So using a line bar, you can see that now it seems like we are on the rise since the month of June. So June, July, August, September, October, November, and December. So all of them indicating an increasing trend in producer prices, which is indicative of an increase in US inflation. So overall, the main data point that we are awaiting for this week will be the official CPI. So CPI is a measure of consumer prices or changes in consumer prices, which estimates the level of inflation in an economy. So in this case, for the US economy, we're expecting inflation to have increased from 2.7% in November to 2.9% in the month of December for the US economy. So the PPI will further cement the idea that inflation is back on the rise, especially if it comes at 0.4% and core at 0.2% or even higher. So another way to look at this is by using the trading economic calendar. So I'll be showing you this shortly. So on the trading economics calendar, you're able to see much more detailed information on economic releases. So in this case, we shall be looking at just a second, looking at the today's main data. So there's PPI month over month, core PPI month over month, but now I want us to focus on the year-over-year changes. So as of the previous reading, that was in the month of December, we had 3.4%. This was reflective of the November data. And now there is a consensus estimate that this may have increased to 3.7%. And of course, there is a forecast of 3.5%. So looking at the usual changes year over year, then you can notice that the overall trend has been an increase, with PPI hitting a high of 3.3% in June 2024. This is year-over-year changes, dropping to 2.6%, and then a gradual rise with a slight drop, with a slight hold between the month of October and November, where producer prices maintained stable at 3.4%. So if we happen to see an increase in this number that pushes it to 3.5% or higher, then that would be indicative that consumer prices are about to get even more pressure and they might be getting further to the upside. So as we have seen, the relationship between PPI, interest rates, and the currency. So an increase in producer prices indicates that there is more pressure on the upside for inflation, and the opposite is also true. So if there is an expectation that inflation will be high, then that means that the Fed may have to hold interest rates much higher. And at the same time, we know that if interest rates remain higher, then the bond yields tend also to increase. And apologies for that. And if bond yields tend to increase, then the currency tends to strengthen. So as we saw yesterday, US treasuries have remained high, that is in terms of yields, with some of the highest returns being seen in the 20-year treasury, which is yielding 5.027. The 30-year yield 4.951, whereas the short-term treasuries, such as the 6-month treasury, having 4.335%. So yesterday, there was quite a number of changes where the smaller or the shorter-term treasuries, that is 1 month to 1 year, had increasing yields, whereas the longer-term treasuries from 2-year to 30-year had dropping yields. So this had the overall impact of weakening the US dollar, but that could change this afternoon, especially if we see a much higher than expected PPI. So that will be the key focus in the markets today. I hope everyone now understands where we are coming from as we look to take opportunities this afternoon. So that being said, we can move on to other key highlights in the market. So bond risks pile up in East Europe amid 34 billion sales spree. So Eastern Europe among the emerging market laggards. So regions local currency bonds make weak start to year. So the price return versus total return for South Africa, as you can see, it was worse at negative 2.5%. For Chile, Hungary, Romania, Thailand, Israel, all of them seeing negative returns, indicating that there is more selling pressure. And as a result, when you see more selling pressure, this tends to increase yields and sometimes can be observed to have a positive effect on the currency. So sovereign bonds in Eastern Europe are having a weak start of the year as a potent mix of economic and political risks weigh on the asset class. So a strong dollar, jumping global yields, sluggish economic growth, and renewed inflation fears are putting investors from Poland to the Balkans on edge, just as Donald Trump prepares to take over the presidency in the US. So in dollar terms, local currency bonds from Hungary, Romania, Poland, and Czech Republic have all been among the 10 worst performers in emerging markets so far this year, according to data compiled by Bloomberg. Hungary stood out with a total negative return of 2.5% through January 10, followed by Romania with a 2% negative return. So while this may be having a positive impact on yields, it's not really helping in the currencies markets, because when yields are increasing and they are really interesting for the US market, then it tends to draw liquidity from other markets, meaning that the dollar tends to have an overall strength against these other currencies, considering that the yields are much better in the US, and of course the risk is considered to be much lower for US treasuries compared to treasuries by other central banks. So also in the news this morning, the Bank of Japan's deputy chief signals chance of rate hike next week. So the deputy governor, Ryozo Himino, signaled an interest rate hike may happen next week by saying that the board will discuss it in a comment that goes beyond recent remarks by his boss about the January meeting. So in conducting monetary policy, it is difficult but essential to judge the right timing, Himino said on Tuesday in a speech to local business leaders in Yokohama. So the board will have discussion to decide whether to raise the policy rate or not, based on the outlook to be compiled at the monetary policy meeting between the 23rd and 24th of January. So the comments underscore that the Bank of Japan isn't ruling out raising borrowing costs this month, with most BOJ watchers seeing it coming in either January or March. When asked in the afternoon about his comments signaling the possibility of a hike, Himino refrained from elaborating much further for now. So the deputy governor also said there are various risks both for the upside and downside, and echoed Governor Kazuo Ueda by saying momentum for this year's wage hikes and US economic policy under new administration warrant attention. So we think BOJ's assessment of both 2025 wage hikes and the uncertainty over the incoming US administration has improved by one notch. Economists Takeshi Yamaguchi and Masayuki Inoue at Morgan Stanley MUFG Securities wrote in a report on Tuesday. We now see higher chances of our Bank of Japan call for a January rate hike to materialize. So that sentiment is driving the currency higher, and we could be seeing some more performance happening later in the day. So outside of that, the CME Fed Watch tool has remained significantly high, indicating that on the 29th of January, we will be expecting no less than the Fed holding rates at the current level. So the market is still significantly confident that there is more inflationary pressure and the Fed may have to hold rates at the current level as they watch for more data to decide whether to pivot or to continue cutting rates. So that being said, lastly on the currencies market, we know that the UK pound is still the weakest currency, closely followed by the euro, whereas the New Zealand dollar, Australian dollar, and Canadian dollar basically overtook the US dollar for the year-to-date performance after the US dollar took some step back yesterday in the afternoon. So with that behind us, I believe it's time we jump into some technical analysis and try to understand where the markets might be headed next. So morning Lamik Bure, can see Juba KT. Thank you for joining. What we expect with the CPI tomorrow before the inflation fear. So I believe today we focus on the producer price index. Tomorrow we'll be having a similar session, especially at 11 a.m. and we will cover the CPI report comprehensively before it happens in the afternoon. So also a good question here. Considering the readings that the US economy has been printing of late, is it more realistic to expect a higher reading than the expected ones for both PPI and CPI? Personally, I'm of the same opinion, especially considering that oil prices are on the rise. And yesterday we saw a 4-month high for the West Texas Intermediate as well as the Brent crude oil prices before oil gave back some of the gains. So also, for those who are new here, you should know that we have a Bullish Banter podcast, a podcast that is designed to provide value for traders. We dive deep into various topics, including macro information, key economic statistics, key developments in the global markets, trading strategies, discipline, and so on. So in our latest episode, we hosted one of the top traders in Tanzania, Samueli, and we published this 3 days ago. We also hosted Ahmed Abdi. This was published 2 weeks ago. It might be in your interest to check out some of these episodes as we continue with educating ourselves and familiarizing ourselves more with the markets. So with that in mind, let's get into some technical analysis and try to understand where the markets might be headed next. So of course, we had Bitcoin having a big drop last week, pushing further downwards. So we had our support area around 91,517. So this played out as we expected, but later in the afternoon, there was a strong rejection of lower prices. And immediately after that, we saw Bitcoin making some important recovery. So having bottomed at around, this is $89,000 per Bitcoin, we saw an immediate bounce. And now we are seeing some positive performance in Bitcoin, having retested yesterday's high as well as a week high that we saw on the 10th of January. So now as we test this area here, it's more likely that we could be seeing a potential break. And if there's a break, then we know the next target level, which is more likely to be 99,600 or rather the 100K mark. So if Bitcoin happens to break the 95,848 price action level, then now we could be seeing a strong rally towards the 100K. So as for the dollar index, we had a very strong rally yesterday in the morning. So I remember when we were doing some analysis, the price was trading around this area here. Then we had this strong spike to around 109.98. This was the high, 109.97. Then since then, we saw the dollar erasing some of those gains and pushing back downwards. And even this morning, we are looking at the dollar making some steps backwards, already retesting a key level area that was acting as a resistance previously, now turned into a support area. So we could be seeing the dollar index bouncing from this area. So if we happen to see the dollar index bouncing from this area, then it's more likely that we could be seeing a reversal in some of the trends we saw yesterday in the afternoon. So key end point, if you look at Euro USD, which made some significant drop yesterday, we expected some form of pullback to around this area before the market continues downwards. So that didn't play out immediately. So it played out much later in the day, so towards midnight. And now we are seeing what looks like a successful retest of this area. So just to give it some perspective, I'll zoom out and show you that this area here was working more or less like some form of support. So once it was broken, there was that overall expectation that the market would retest the area. So from the 1 hour chart, this is how it looks like. So an area that the market was unable to break as last week's bottom, managed to break on Friday, and then on Monday pushed lower. And now we are looking at Tuesday, the market retesting the same area. So while this may look like a positive sentiment for the euro, the overall price performance, especially on the daily time frame, shows an increased pressure where the euro has been losing to the US dollar. So in such a case, sometimes you might see signs of reversal indicating that the market is moving higher now, but then they don't tend to last long, especially as they are against the fundamentals, and the fundamentals are indicating a very strong dollar and a very weak euro. So from the weekly chart, it's a week over week bearish momentum. So I'll try and clean the chart. So from the weekly chart, you can see we have had consecutive weeks of the euro losing to the dollar. So from this area here, you can see that this is literally 15 weeks. And in 15 weeks, we have only had 3 positive weeks, meaning that 3 out of 15 weeks is the period where the euro gained against the dollar. But then for the rest of the 12 weeks, the euro has been losing to the dollar. So while it may look like a positive sentiment here, and it's only Tuesday, we could be seeing the market continuing with a bearish momentum. And if you go to the forward chart, you'll notice last week started with a positive momentum and then ended up along the trend. So the previous week started with a bearish momentum and then ended up against the trend. And now we are seeing a drop and then an increase here Monday, Tuesday. But overall, we expect some further bearish momentum. So while this may look positive as if the euro is recovering, I would be more cautious about it and be looking for short selling opportunities as the dollar continues being dominant. And of course, we know that there is an underlying, I would call it a Trump trade happening in 6 days, where we expect some positive momentum in the dollar as the US President-elect Donald Trump gets inaugurated. So overall, I still expect the dollar to continue gaining against the euro. So any signs of reversal here might be very interesting to trade, especially if the market manages to retest this area. So the idea is to be looking for a short selling trade once we have confirmation that the sellers are coming right back in. And it's the same thing for the pound, which has been one of the weakest currencies in the markets. So on the 15-minute chart, you can already see the market struggling to form higher highs. So notice here the high we had in the morning, that is in the Asian session, is also the same high we are experiencing at the open of the London Open. And there's that potential that eventually we see the market dropping right back to the previous low that we experienced yesterday. So as for the yen, that potential of the Bank of Japan hiking rates next week basically implies that we should be observing this range closely to see if there is that potential break. So a rate hike by Bank of Japan would imply that the yen continues against the pound. And in this case, we could be seeing the yen continuing to strengthen against the pound. So of course, it's the long-term trend. And in the last couple of days, all we have seen is the yen strengthening against the pound. And we could be seeing that continuing today. So we continue observing this range to see what happens later in the day. So our USD managed to make a very strong break towards the upper side. In this case, retesting this area here. So now that we are seeing a complete retest of this area, so our area idea of the market moving further back downwards is still applicable, only that it's happening at much better prices. So we continue observing the area, and if the dollar strength resumes, then we should be looking at other areas, such as this bottom here, which coincides with the previous swing area here. So it could imply that we are headed much further downwards, especially if the dollar was to recover later today, especially during the PPI news release. So USDN continues to be noisy. You can already see this kind of formation from the forward chart. This is how it looks like. So even after ranging here for 3 weeks, breaking towards the upper side, it seems like the market has completely failed to form some form of momentum, and it's still more like a range-bound market. So in this case, it would make more sense to adjust the trend line from a range now into more of a slightly upwards channel. And then we observe for potential breakouts from these price levels here. So I would be more of observing this range rather than trying to trade in between the noise, especially considering that on the 1 hour chart, it hasn't been looking all rosy. So notice how we've had this retest on the lower side. On the upper side, you can already see this has been more of some form of channel within a channel and out of noises here. So this is usually indicative of an imbalance in the market or indecision, and it's usually closely followed by a strong momentum trade. So let's be on the lookout, continue observing the chart, and when the opportunity arises, then we take it. So for the Nikkei 225 index, we expected yesterday that there would be further downside momentum. Yes, it kept playing out. Later in the afternoon, there was an attempt at recovery, but the market kept pulling back downwards this morning. So the idea remains the same, that the Nikkei 225 index is still stuck in this range. And now we are seeing a potential reversal, hasn't played out yet. So given the 4-hour candle that happened about 8 hours ago, could still be seeing the Nikkei retesting the lower side of the range. And once it retests and perhaps presents an opportunity to start going long yet again. So for gold, we analyzed this particular triangle here yesterday. Of course, we expected a breakout to the upper side, but the breakout happened towards the lower side, creating an opportunity to go short. So prices kept going downwards, eventually finding some support around the price action level of 26.56 before bouncing later in the afternoon. And now we are seeing gold resuming some bullish momentum here. So clearly, it seems like the retest of this area was done successfully and gold resumes the bullish momentum. So today it may appear that gold is attempting to keep pushing higher. So having not broken the previous highs, then it's more likely that the bounce will continue and we keep seeing gold on the rise again, perhaps even retesting last week's high of 26.98. So remember, the long-term trend in gold is still very bullish. So here we are looking at potential bullish positions alongside the trend in gold. So Brent oil, we mentioned that it had hit a 4-month high. So there was this slight pullback. So as we had discussed yesterday, we talked about observing this range here to see the potential for a break. So in this case, instead of a break, what we had was more of an extended range. And now it seems more likely that the flag is just getting extended. Here we have a trend line now that we can work with. And of course, on the upper side, it seems like the market is following some kind of path along this area here. And if we try to zoom it out, then we could be potentially seeing a break later today as Brent oil keeps pushing on higher. Of course, the signal would be if the market breaks and moves higher here. So US equities made a surprise comeback yesterday. You can see the strong bounce that happened later in the evening, especially after the US market opened. But also, you have to check the overall trend. So on the daily time frame, the overall trend has always been bullish. And in this case, after getting this pullback here, it showed that from the most recent high, there was a 7% drop in the Nasdaq, and now we are seeing a very strong recovery after yesterday's daily candle indicated a very strong rejection of lower prices. So today we are seeing some good recovery. This could perhaps continue for the rest of the day unless something changes, and that something could be the producer price index data. So perhaps we should be looking to target this area here as the long-term trend in US equities seems to be bullish. So in this case, 21,152 for the Nasdaq. So we're also seeing a similar thing in the Dow Jones. So clearly, after the drop yesterday, we are now seeing a very strong recovery. So for the short-term traders, we should be looking at 42,610 for the Dow. For the SP 500, we know where the momentum in selling started last week. So clearly, still, we are looking at a complete recovery here to 59.11. So earlier downside targets are gone, given the daily candlestick that we saw yesterday. indicating a very strong reversal. So whenever you see such a daily candlesticks on the SP 500, it's usually indicative of a strong comeback. So in this case, we are looking at a potential of the market going right back to the start of the momentum. So in this case, 59.11 could be a nice target today. So the dollar index still on the bearish momentum, haven't changed direction yet. So perhaps this will be happening in the afternoon. But also we have to be open with the possibility of the dollar index losing some more ground today ahead of the official CPI tomorrow. So USD trading against the Swiss franc, we tried to identify some major breakout here yesterday. Didn't play out until later in the afternoon when we saw this changing here to this area here. And then for the upper side, this is the projected breakout. So it didn't last for long. This was the only breakout that we had. But then later on, the market erased all the gains, and now we are seeing a strong bounce from this area. So USD trading against the Swiss franc, we identified this previous high as a key level of interest, and now we are seeing the market having some form of interplay at the same level. So after the sharp drop earlier in the morning, here we are seeing the dollar bouncing strongly on the 15 minutes chart, which indicates a likely rejection of this lower price and potentially the dollar making a rally and pushing for higher highs on the Swiss franc. So on something else that I mentioned earlier in the day, that was Chinese equities making a very strong comeback. You might be interested in checking out the Hang Seng Index or the Hong Kong 50 Index. So clearly a very strong performance this morning after a sequence of bearish momentum. So in this case, it's indicative of investors coming back into the market, giving the outperformance of the Chinese exports as well as imports. So in this case, even the borrowing having increased is still positive sentiment for Chinese equities. We could be seeing some further upside. So the China A50 index is also doing a similar thing. So this morning, there was a pretty good jump, erasing some losses that we had experienced for a whole week or uncovered in one session this morning. So this implies a very strong comeback in Chinese equities, and we could be seeing some further momentum playing out later in the week. So if you have not been observing, then this might become a major trend. So if the market has been following this path for a while and then makes such a big breakout, then chances are that the breakout continues for a while. So that being said, don't know if we missed anything else. Just trying to check. So yes, yesterday there was a question around the DAX or the German stock market index. Just trying to check it out. Still can't find the chart. So this is the Spanish index making a recovery. So basically European equities after the big sell-off yesterday, they are making a good recovery too. So the Euro 50 cash index is also making a very strong recovery in correlation with in correlation with US equities. So also for the French stock market index after the big sell-off yesterday, in the evening we saw recovery, and today we are seeing even more recovery. So even for the DAX, I expect the same thing. I found it, the Dow Jones index, the German DAX or the Deutsche website. Not website, but stock market index. So after the big sell-off yesterday, we expected some level of support around this area here. So towards the evening, there was a reversal, and now we are seeing the market getting right back into the previous channel, which implies that we are likely headed to the previous high. So key target area of 20,400 could be playing out for the day. So we expect some further upside momentum for the German stock market index. So that's it for the day. Thank you very much, everyone. So I'll be checking the comment section to see if there's anything else I haven't answered before we approach the end of the presentation. I don't know what you mean by this. I'm happy New Year came in late. I think it just came at the right time. Good morning, Juba KT. Just checking. So suppose after PPI data is released higher than expected, which currency is the best to pair with the USD that should be strong then? I mean, which currency is properly weak? What in case of weaker PPI? So I think we already covered this on the previous presentation. I'll show you this. So since the year started, the strongest currency has been the dollar, until something changed yesterday, and we had three more currencies strengthening. And the weakest has been the pound. So in this case, if we happen to see a strong PPI and the dollar strengthens, then it's much better to pair it with the weakest currency in the market, which is the UK pound. But then if it happens to be weak, then currency we have just discussed, whose fundamentals seems to be doing quite well, seems to be the JPY, which is expected to have a rate hike as soon as next week. So we could be pairing that with the yen. So a weak dollar would be best paired with the yen, and a strong dollar would be best be paired with the GBP. So we already covered GU. Thank you for the comment here. Rufus and Robert Mbogo. 3.5 years trading in the row. Changing my life little by little. Keep going. I'm really happy for you. Keep turning up every day. So I don't know why I'm getting more comments on pound USD, even after we discussed it extensively at the beginning of the session. So for pound USD, as we mentioned, the pound is having some gracious movement after having a couple of beatings since last week. But then looking at today's performance, we have already tested this level twice since this morning, and the pound seems like it's unable to break this high. So this implies a likelihood that the dollar is strengthening again, and we could be seeing the pound moving back to the previous low that we saw yesterday. So this is a likely play. So we just continue observing the price action here. So from the 1 hour chart, this is how it looks like. You can already see the candlesticks struggling to form a new high. So that's it for the day. Thank you very much, everyone. And I hope to see you on the next one. So remember to like and subscribe to the channel. And if you're watching this on X, like and share the live video. So if you're a beginner, make sure to check out the Novice to Pro course, which is available on the FX Pesa YouTube channel. These will basically help you transition from a complete beginner to a pro level trader. And with further education and mentorship that we are doing free of charge on the Zoom sessions, then you'll be able to improve and get yourself into at least an intermediate level. And with practice, you get to experience more about the markets and become better at trading. So also, for those who are new, these sessions happen every day at 11 a.m. from Monday to Thursday. And at the same time, if you're looking to open a trading account, check the links in the description below. If you're watching this on X, then check the links with the FX Pesa handle. So that's it for the day. Enjoy the rest of your day. I wish you a happy and profitable trading day.